What's up, guys? Today we're doing a portfolio update on my overall portfolio that is doing a roughly 40 to 50% APR right now. And sometimes I switch the trackers I use because they're all good at different things. For example, in Metrics Finance, I could add a bunch of wallets here. Recently, I've set up a new wallet to do leverage yield farming with this ETH and USDT position here. But you could see I have a pretty good track record of beating impermanent loss, up about $11,000 right now compared to holding in the market. And if you include all of the closed positions, I'm up roughly $42,000. So doing pretty good. Altcoins are starting to recover a little bit and hopefully we swing higher here. But in this video, I just want to break down my portfolio and give you guys a few tips that have helped me in my yield farming journey, as well as my own plan to tackle the rest of 2025. If you're new here, my name is Richard. My channel is mainly focused on yield farming and how to earn passive income from crypto. So if we look at my current portfolio tracker here, if we zoom into this pie chart, we could see that my BTC allocation has increased to roughly 2.6%. I came from the NFT world, so I never held a lot of Bitcoin to start with. It was a painful mistake for me, especially because Ethereum has been underperforming, even though the trend might be reversing a bit right now. But you could see compared to the January portfolio, I've been increasing my allocation by using the gains I've made from yield farming to dollar cost average into Bitcoin. So that's my long-term plan here, to build my Bitcoin portfolio by slowly dollar cost averaging with the fees I earn from DeFi. So you can see my Bitcoin value here at 0.01679. And at the end of May, I've increased that to 0.047. If I keep that up over a period of years, right, reaching 1 Bitcoin is not out of reach just using the fees from my DeFi portfolio. So that's the Bitcoin portion. I still hold a big portion of Ethereum. You can see that here, as well as this here in a leverage farming position that is worth roughly $42,000, and Ethereum NFTs as well at $44,000, and a bunch of different altcoins that are sitting in my yield farming position. And if we look at the liquidity pool breakdown here, I've started using the leverage yield farming with this ETH to USDT position on ETH mainnet, but the rest of my portfolio is still pretty altcoin heavy. I'm in the camp that the altcoin season is going to still happen. That's why I still hold a lot of altcoins. When the interest rates come down and the risk goes on again, I believe altcoins are going to come back. So it's pretty hard to see my performance with this chart. So what I want to look at is this chart here. So I really like this dashboard here because it compares my US dollar value of my portfolio, as well as the Ethereum value, Bitcoin value, and Solana value. And if I on-ramp and off-ramp crypto, I could log it and it would show here. So I've been collecting roughly $4,000 to $5,000 worth of fees in the last couple of months, except for March where the volume was lower and the prices were lower. And you can see the Ethereum value of my portfolio pulled back a little bit, but is still increasing in value compared to January through March. It peaked a little bit in April because a lot of the altcoins have been doing well against Ethereum in April, but now Ethereum is showing some strength and smaller caps are kind of pulling back a little bit. And in US dollar value is really nice here. My January end balance was around 222K, and now in May it's all the way at 191K. So quite a big swing up from March low at 129K here. So that's really nice to see. As well as the Bitcoin value, you can see it declined all the way to 1.5. Now it's at 1.83. And my long-term goal for this portfolio is to increase both the US dollar value as well as the Bitcoin and Ethereum value, depending on which stage of the cycle we're in and where I'm deploying my capital. And against Solana, I've been outperforming Solana pretty consistently here, so doing quite well with my altcoin portfolio. If we zoom in on the fees here, I collected roughly $4,172 from these positions here. Stuff like Ethereum to Sol, Pixel to ETH, AIXBT to ETH, Arrow to ETH, MOG, All of them are Ethereum based pools. That's why I use some of the fees to buy Bitcoin to balance out my portfolio, as well as compound some of my fees. If you see here, I've been compounding almost like half of my pools to keep growing my DeFi portfolio, and these tokens were trading at a lower price. So then when I compound, it's going to drag down my entry a little bit or my average cost. And when these tokens recover in price, I'm going to make a lot more profit. I did close one position this month. It's the Ethereum to Sol pool that you guys saw. It's this position right here. It was outperforming holding in the market. It was in range for roughly 90 days. And if we compare the profit and loss with Ethereum terms, you can see I made roughly 0.91 Ethereum. And the reason why I closed it out, because when I look at the Sol to Ethereum chart, I'm a little bit worried about this chart playing out to the downside and retracing a little bit. If we see a lot of strength with Ethereum, Ethereum could be outperforming Solana here in the next few months. But again, nobody knows the future. So if it doesn't play out, that's fine as well, because I am in a bonk to Ethereum pool. If you guys are in the Solana ecosystem, you've probably heard of bonk. And when Solana does well, bonk would typically do well as well. And if I see an explosive move up, I could decide to take profits as well. I might stay in this pool if I am still bullish on bonk, and I might just keep selling my fees because it is generating a pretty nice APR. You can see here at 59% on a pretty large cap token. So this is a new position here where I have a leverage yield farming setup. If you guys use Rabby wallet, you could add your wallets as a watch only wallets to look at all of your DeFi portfolio. So for a leverage bull setup, what I typically want to do is I deposit this Ethereum here, borrow out some USDT, and then I'm going to yield farm ETH and USDT with that money. And as Ethereum go up in price, this pool value would be in profit as well. And during the whole time, I would be earning a higher APR than the borrow rate. So I lent out 16,000 USDT roughly 26 hours ago. And now there's roughly a $2.41 worth of interest. But you can see here my fees are comfortably outpacing that. So over a long period of time, as long as Ethereum's price doesn't crash, I could use these fees to comfortably pay back this loan to decrease my risk and deleverage. So that's a great way if you know how to run liquidity pools to basically gain more yield on your Ethereum rather than just staking. If you're just staking, you're only looking at 3 to 4% return, right? And if you guys look at my other positions here, they're still mainly open. Bonk to ETH that we just talked about, and then AI XBT to ETH, and AI agent token. Aerodrome is the native DEX of Base, and Arrow is their token. This one is not doing too hot, but other pools are doing quite well, including this Base is for everyone token. So this overall profit and loss is actually sitting at a loss right now. It's still printing me a nice APR, but there's still some room of price to recover because the earlier positions that I closed and rebalance into were in a loss, right? So even though here it shows a profit, from this token, I'm still sitting in a loss. And then MOG for ETH, I'm sitting in some nice profit while earning some pretty nice fees. So that's my current setup. You can look at this breakdown here. And the reason why I have a larger allocation to Pixel is because my cost basis for Pixel is lower, and I might shift these pool allocations at any time. So now I want to share a few tips that have helped me for yield farming. The first one is you really need to have conviction in the tokens that you are yield farming with. If you guys look at these AI XBT token or the Aerodrome token, sometimes we're sitting in pretty big losses, right? You can see I'm down 20% on my initial investment. So not like 90% down, but still down quite a lot in like total value terms, right? In US dollar terms, it's down like 2,000 something dollars. So it's definitely not comfortable to hold these positions, especially if you guys are only yield farming 1 to 2 tokens and those tokens are not doing well. Then you really need to have like good research and strong fundamentals that gives you the conviction in the project, right? Because if you guys don't do your research and basically just yield farm random tokens, when the prices drop hard, chances are you're going to panic sell and then sell out of positions. Even though when the prices are cheap and the assets and the fundamentals are the same, that's when you should be buying, right? So you should be doing like the opposite of what most people do. A lot of people buy these tokens at a high price, thinking that it's going to go higher, right? Then they see a big drawdown, break below previous support, and then they panic sell. And sometimes these tokens, if they have solid fundamentals and the market conditions are good, then they will recover, right? If we look at this arrow to ETH chart, my entry is all the way up here, but I'm not sweating because I still believe in this project. Maybe the token is not as strong as other altcoins, but I still believe that there's a chance this is going to swing back up, especially when the market condition is good. And instead of panicking, what I would do is either just sit tight in my position, collect my fees. I could de-risk my fees if I want. But if I want a heavier allocation, when the prices are below my entry, that's actually the best time to compound my fees, right? Because when I compound the fees, what it does is it drags down my entry. And later on, when Arrow's price recovers against Ethereum, it's going to make it much easier for me to make a net Ethereum profit. And I don't have to only compound the fees that I get from this pool as well. I could invest the other fees that I get from the other pools into this pool if I want a heavier allocation. So I've been compounding this Arrow to ETH pool a little bit, but I'm not compounding too hard because I already have it as like 5.5% of my yield farming portfolio. So already a decent allocation. And the APR is not crazily high, roughly like 31, 32%. So I don't really want a too heavy allocation on Aerodrome. So that's the second tip. If you still believe in the project, if you believe the prices are going to recover, then when the prices are cheap, that's typically the best time to compound your fees because it drags down your entry, right? Instead of selling your fees at a cheap price, you compound it. And when you compound it, it's going to dollar cost average out. And then when the market bounces back, I could close my position for an Ethereum profit rather than a loss. But again, this strategy only works if the prices recover. If Aerodrome, for example, just trend to zero, then this strategy would not recover. I don't think this token is going to zero, so I'm fine with just holding and compounding my fees and just waiting for the prices to recover. So that's the second tip. And the third tip that have helped me a lot is to take profit every single month. So it doesn't matter if the prices are high or the prices are down. I want to make sure that I'm securing profits with my yield farming fees. If you guys look at my logs here, right, in February, I was earning $5,000 from my fees, March, 2,700, April, 4,000, and May, 4,000. Sometimes I compound a lot of my fees. For example, this month, I compounded roughly $1,000 into my pools. And then I also use roughly 1,000 something dollars to dollar cost average into Bitcoin. So that's me taking profits from these riskier investments into Bitcoin. And you guys don't have to buy Bitcoin, right? You could sell those riskier altcoins into stablecoins as well. But every single month, I'm always securing some profits, even though some months might be less than other months. And over time, I will be able to stack those profits. And when I'm running Ethereum pairs, a lot of times I like to take profits when the prices are trading above my entry. For example, this Pixel and ETH pool. You guys can check that by simply going to Revert Finance and change this reference value to Ethereum. So if it shows like a positive divergence loss here, then it means that the prices are trading above my entry. And when this happens, it means that my original liquidity has gained its value over time instead of declining in value. If we look at other pools here, you can see Bonk to ETH, right? This is sitting in a profit. And if we compare it with pools like AIXBT, currently it's pulling a nice APR, but sitting at a slight loss right now, down roughly 5% from my investment. But I'm not sweating it because I'm still earning a lot of fees. I'm compounding the fees to average down my entry. You can see here fees collected and then deposit. And as long as I stay in range for a very long time, I should be able to turn a profit if the asset doesn't bleed out. So Aerodrome actually had a huge divergence loss here, but the losses are a little bit less because I had some fees. So if you guys use the same strategies like mine, like if you have at least 5 to 10 open positions, especially if you enter at good prices, chances are you're going to have some pools that are sitting in a divergence loss profit, right? For example, this bonk to Ethereum pool here. And instead of compounding pretty heavily when the prices are above my entry, which would drag up my entry, I would instead sell the fees of these pools and take profit on these, while these pools that are sitting in a loss, I would compound these pools more heavily as long as they're not over allocated already to drag down my entry. That's the main way how I try to maximize profit. You want to sell at a high price, right? And then you want to buy or reinvest when the prices are low. So that's the three main tips. Compound the fees when they're cheap. You got to have conviction in the projects you're yield farming with, and you get that conviction through research. And lastly, you always want to think about taking profits. Even if the market is moving sideways, you could still be in a crypto profit that you could secure either into Bitcoin or into stables or even into Ethereum. So always be looking to take profits, especially if you guys are running smaller cap pools. You always need to de-risk a portion of your capital. Otherwise, it could all trend to zero. So now let's pivot and talk about my plan for the rest of 2025. Let's look at the current market outlook. If we look at the stock market here, the S&P 500 looks like it's swinging up based on the weekly chart. And if this breaks new high, I think we'll see some more bullishness in the market. We look at the 10-year government bond yield, it's still sitting around 4.4%. I think this is probably one of the major catalysts that is coming this year or next year when the rates start to come down. That's probably when we see a more risk on environment. But before that, prices could be moving sideways or slowly trend up. And another bullish catalyst that we keep seeing is that these companies just keeps buying Bitcoin, right? For example, MetaPlanet is a company based in Japan. They bought a ton of Bitcoin and then they're now the 10th largest public Bitcoin holder. And some companies, for example, SharpLink Gaming here, they're trying to raise more money to buy Ethereum. So we could see a lot of corporate bullishness on both Ethereum and Bitcoin. So that's why I'm still leaning a bit bullish, even though the prices might feel like a little bit weak sometimes. And if we pull up this Bitcoin to others chart here, in my opinion, Bitcoin is more expensive compared to alts. So that's why currently my portfolio is still mainly based in altcoins. I'm still trying to bet that altcoins would outperform Bitcoin in the next 6 to 12 months and slowly shift my allocation to more and more Bitcoin when the prices of altcoin rises against Bitcoin because I would get a better exchange rate. If I look at this ETH to Bitcoin chart here, potentially there's a reversal in play. We'll see how this chart actually turns out, but I don't think it's out of the world to see a big Ethereum performance for the next 6 to 12 months. And even if I'm wrong and Ethereum was weak, then I'm always taking profits every single month, so it's okay. And that's the great thing about yield farming, right? You're earning the fees and you could take profits every single month, especially if you get in at really good entries and these pools just keep printing fees. And once the market becomes more and more bullish, for example, if Ethereum is trading near $3,500 to $4,000, I might shift a lot of my altcoin allocation to more Ethereum to stable pairs or purely stablecoin yield farming. And if Ethereum breaks even higher, right, I might consider even shorting the market a little bit to reach a more delta neutral portfolio. But that's pretty much my strategy. And your strategy could be different, right? If you're not sure where the market is going to go, maybe a big portion of your portfolio, let's say 50% or more, is farming crypto to stable pools because those type of pools would have less drawdown if Ethereum, let's say like retest $2,000 again or $1,500 even, right? Then running more crypto to stable pools could be good for you to accumulate more Ethereum or other altcoins like Solana. Or you could be running purely delta neutral strategies, yield farming with stablecoins. There's a lot of ways to do that as well. So those are typically the strategies that you want to run if you are more bearish on the market. So that's it for the portfolio update. I hope you guys got some value out of this video. If you guys want to learn more about how to become a consistently profitable yield farmer, then be sure to check out these other videos on my channel. I mainly focus on yield farming because it's the most profitable thing I've found in crypto. And I think most people could do really well if they just stick to it and learn everything that you could learn about yield farming. Thanks for watching. I'll catch you guys next time.